I think the best way to think about that question is to consider the alternatives people have. So you're a normal person and you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%. You got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000.
Michael Saylor, the executive chairman and co-founder of MicroStrategy, is an unwavering advocate of Bitcoin, the world's leading cryptocurrency by market cap, and its underlying network. He firmly believes that Bitcoin is not only the best cryptocurrency offering but also the most suitable asset for all categories of investors worldwide. Saylor has demonstrated his conviction by making several multi-million-dollar purchases for both his personal portfolio and his business analytics firm. Currently, MicroStrategy holds over 152,000 Bitcoins on its balance sheet, making it the only publicly traded company with such a significant Bitcoin position. During a recent discussion with Altcoin Daily, Saylor emphasized that the potential approval of BlackRock's and Fidelity's spot Bitcoin ETF applications would be highly advantageous for institutional investors. He believes this could provide institutions with the much-needed opportunity to enter the cryptocurrency industry, which many have been eagerly waiting for. Saylor also encourages retail investors to consider investing in Bitcoin, especially given the present economic environment. He dismisses other alternatives like bonds and savings accounts, which may not effectively help increase or preserve wealth due to the declining value of fiat currencies. In contrast, Saylor sees Bitcoin as the superior choice for savvy and serious-minded investors, as it offers a secure and inflation-resistant store of value.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
For the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly, bonds don't work, right? And savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally, the money supply in the US is expanding at 7%, and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million. So that's wealth preservation, but you're not doing any better than that. And that just kind of assumes that that the S&P 500 is going to be relevant for 100 years and you can stick around the country. But it's like treading water. The next issue is, well, so what I put in real estate? If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? Rich families buy warehouses, city blocks, and buildings, but the middle-class person doesn't. So how do you buy $4,000 worth of a building? Can't. Okay, so the issue there is your property rights are inferior when you're buying shares of stock or a security versus the underlying property. If you own the building, you can mortgage the building, sell the building, upgrade the building, build 10 floors above the parking lot that the building has. You can develop the building. When you own a share in a REIT that owns the building, like you own 1/100th of the building, you don't have any of those rights. You can't do anything to the building. You're just along for the ride, getting 1/100th of whatever cash flow the general partner decides to distribute to you. And if they make stupid decisions, you're stuck with them, right? You don't have any property rights. You're inferior in your economic rights. So owning shares of a REIT to get property for 100 years, not a great idea. That leads us to the problem of securities. What is the problem of security? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The dilutive problem with securities is there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%. You want to see that in action? Just go look at any ETF. The ETFs charge 90 basis points. You know, if you want to put money into a Bitcoin Beto or whatever, they'll charge you 90 basis points just as the management fee. So about 1%. What's the cost of 1% over the course of a lifetime? An infinite duration asset, you would basically multiply it by 20, 25. So it means that when I charge you 1% to manage your $1 million, I'm taking 20% of your money. Okay. I'm taking 20% of all your wealth to charge you 1%.
In one of his recent tweets, Michael Saylor shared a compelling chart that solidifies his unwavering confidence in his multi-billion-dollar bet on Bitcoin. The chart showcases the returns on various asset classes since 2011, just a couple of years after Bitcoin's creation. Notably, Bitcoin stands out as the clear leader with an impressive annualized return of 151.3% between 2011 and 2023. In comparison, the next asset class on the list, the US Nasdaq 100, had a much lower annualized return of 17.8% during the same period. The truly astonishing part of the chart is Bitcoin's cumulative returns between 2011 and 2023, which amounts to an astounding 10,412,288%. In the 15-year span, Bitcoin outperformed all other assets in terms of returns for 13 years, with only 3 years of lower performance. This consistency is unparalleled, as no other asset managed to secure the highest returns as frequently. Michael Saylor's tweet caption reinforces the significance of Bitcoin's performance, declaring it as the uncontested champion among financial assets. In his interview with Altcoin Daily, Saylor further highlights multiple compelling reasons why everyone should consider owning at least one Bitcoin in their lifetime.
So when you run a company, you also have you have the risk of labor, right? Your company may unionize. So you've got labor expenses, and what happens to the equity value when the company unionizes? Well, the union just takes all the profits, and the equity values of those companies start to trend towards zero. So labor is another risk. The third risk is your competitors, right? Your competitor may come up with a better product and you end up like Yahoo squeezed out or AOL squeezed out by Google. Well, then your stock's going to zero, right? I mean, how many companies actually had a competitor? Xerox, Kodak, world's full of great companies. Where are they today? They end up getting squeezed by competition. The fourth issue is technology, right? You may just get obsolesced, right? Maybe you own natural gas fields or oil fields and someone creates nuclear power plants and they don't need your oil anymore. Or maybe you sell the world's greatest chemical cameras and people don't need cameras anymore. They have digital cameras, right? There's always that kind of risk from technology. And then there's execution. Maybe you just don't ship the iPhone 47 to be that good, right? Maybe the iPhone 13 is good and the iPhone 15 is not good, right? And and the world's full of examples of that, like Firestone tires or something, and I ship a tire and the tire blows out, and now people stop buying my tire. Or New Coke. Remember New Coke is a product launch that didn't work out well. So when you're investing in a company, you're not just getting a pure investment. You're actually getting an investment in an asset, but you're getting hammered and diluted by force majeure, by bad weather. Yeah, you might get a war. You might get a tariff or a trade war. Like we just decided to put a tariff of 20% on all Chinese imports. Oops. If you had a factory in China, what happened there? And then maybe you get a real war where someone just impounds your ship or blows up your factory. That happens too. We have real wars all the time. So what's the return on the S&P index? 7% a year. What's the monetary inflation rate? 7%. What's really happening? Well, all these companies, they're just barely holding their wealth. And so what would happen if I got rid of all those risks? What if I could buy a product that was never going to obsolesce, that's good for 1 million years? What if there was no management team and they work for free, right? What if the product is run by computer programs that don't charge a fee? What if there's no labor? What if it's a digital product, so there is no chance to block it via a trade war or destroy it via real war? What if it was an indestructible, immortal, incorruptible product? Well, when you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network, or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years? 20 years, 100 years, 1,000 years, 10,000 years? the product's not obsolescing. It's 1/21 millionth of everything. You see, the iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles, and maybe you won't need televisions. Those things can obsolesce, but will you want 1/21 millionth of all the energy in the human race? Probably.
Meanwhile, U.S. presidential candidate Robert Kennedy Jr. has recently revealed his comprehensive plans for Bitcoin, which he intends to implement if elected president in November 2024. During a speech at an event on Tuesday, Kennedy pledged to make America the global hub of cryptocurrency, with a particular focus on Bitcoin. To encourage increased investment in green and renewable energy production, his administration would incentivize the cryptocurrency sector. Additionally, he promised to counter Operation Choke 2.0, an alleged regulatory effort by the Biden administration to restrict the cryptocurrency industry's access to banking services in the United States. Kennedy's campaign also aims to establish strong barriers against the issuance of central bank digital currencies. Instead, he plans to back the US dollar with real finite assets, including gold, silver, platinum, and Bitcoin. He emphasizes Bitcoin's significance as the world's hardest liquid asset, believing that it will strengthen the US dollar and ensure its continued dominance as the world's reserve currency. Notably, Kennedy recently disclosed holding up to $250,000 in Bitcoin. As we consider Michael Saylor's interview and Kennedy's campaign promise, it becomes evident that the perspectives on Bitcoin's role in the financial landscape are diverse and potentially transformative. Both individuals present unique approaches to harnessing the potential of Bitcoin and cryptocurrencies. We invite you to share your thoughts, comments, and observations in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.